Welcome back to Squawk Box. Our next guest says that banking stocks have been telling us that equities are about to enter the third phase of a bull market. For now, for more on that and the markets and where it's all going, I want to bring in Andrew Slimmon, Senior Portfolio Manager at Morgan Stanley Investment Management. What do you mean by that? I think this, we've been on this run. Some people think trees don't go to the sky. Others think that maybe there's a lot more sky out there.
Sure. Well, you're right, Andrew. Look, the market started to anticipate President Trump winning a month ago. So I think on a short-term basis, the market is very overbought. And, we're ripe for any bad news causing pullbacks in the market on a short-term basis. But I don't think we're going to get much of a pullback for, Andrew, four simple reasons. Number one is, we're in the honeymoon period where it's not reality. It's all about what the next president's going to do. And that won't happen until after the inauguration. The reality sets in. Number two, I think it is the number one period right now for corporate buybacks. And we've ended Q3 reporting, so you're going to see a big wave of buybacks between now and year end. I think positioning has been, wrong, and I think people are looking for opportunities to get in. And number four, this is probably the most important, is, Andrew, in the next couple of weeks, you're going to hear a lot of strategists roll out their 2025, outlook. And if you've been bearish the last 2 years, you've either switched or you got a new job. So I think you're going to hear a lot of outlooks that are pretty positive for next year. And to your original point, that's consistent, which is, bull markets are born on pessimism. They grow in skepticism. Right. Well, that was 23, a lot of pessimism, growing skepticism, 2024, and they mature in optimism. And that is what 2025 will be, is a much more optimistic. It's not the end of a bull market, but we're not in the early innings anymore. And I think the investment bank stocks, if you look at them, they're all telling you that we're going to have more M&A, more syndicate, more IPOs, more stock speculation. That's the normal sentiment cycle. So I don't think, I don't think anything about this bull market is different than we've seen in the past.
I guess just from a timing perspective, trying to understand what this honeymoon period is that you're describing between now and inauguration, but really is it now and inauguration and then many months past that as things start to get enacted? I mean, obviously there's going to be a big fight over taxes that we know. So how do you see that playing itself out?
Well, yeah, I think tradition, the first year of a presidency is a good year for equities because the reality of all those things that you're talking about don't happen all, on day one. So I do think that you're going to get a continued rally. I suspect the 2026 will be a tougher time for equities because of many of those things won't play out as perfectly as I think people hope, right? Number one. Number two, I don't think inflation, we put the genie back in the bottle, but I don't think inflation's dead forever. Usually inflation comes back 2 to 3 years later. So I do think next year will be a good year. My biggest concern is we pull forward the returns for 26, 27 into 2025.
Okay.